Hey folks, Frank Zorrilla here. Sunday, July 21st, doing a quick video just to let you know the process, what it is that I'm doing, and I'm going to go over the watch list for tomorrow. So first and foremost, let's take a look at some of the breadth indicators, some interesting things. Right here, what we have is the Russell 1000, which is the SPY, the QQQs for the most part, and some other stocks that comprise what the Russell 1000 is, right? And these are the stocks that are above their 20-day moving average. Surprisingly, okay, it took a tumble here, right? So the blue line is the stocks and the amount, and the 5 days is the 5-day moving average, which is the red part. It took a tumble here. The Nasdaq took a tumble, so did the Q100s and the FANG names. And at the same time, when this happened, the small cap, right, took off to the upside, right? As you can see that here. And now, surprisingly, over the last couple of days or so, we're now back above the 5-day moving average in the Russell 1000 breadth, which is positive, but we're now underneath the 5-day moving average on all stocks, right? On all stocks that for them not only consists of the big names, but every single stock out there, as you can see that as well. I think this is okay. I think we only get to be concerned about this breadth indicator turning negative is when the 5-day crosses a 10-day moving average. We still have a lot of room to run, okay? So that is that. As far as the list is concerned, if you go on to my YouTube channel, you'll see how I comprise some of these lists, right? For example, here, the scan to find the biggest future winners. I would suggest you take a look at that. There's another one that's called the Top 400, which very simply goes over how you take the top 400 names, you open up a universe of stocks, and you take the top 100 names or 200 names on a 3-month basis, the best performing stocks on a 6-month basis, year-to-date basis, 1-year basis, and you put them all together. So that might add up. If you take the top 200 off of each little date window, it comes up to 800 names, but a lot of the names are gonna duplicate. So you might get a list of maybe 462 names, right? So what I normally do is I can go over all 462 names, or I can just take a look at the stocks that are trading within 4% of their 20-day moving average. So that way we're able to find stocks that more than likely have gone through some type of consolidation, right? So I do that with the universe of stocks, and then I do the same thing, but this time, instead of doing the universe, I do it for the Russell 1000 names only, because these are the bigger names, and sometimes they don't show up. They don't have as much momentum as the smaller cap names, because these are higher price stocks, bigger capitalizations. So I do that separately as well. And in a situation like we're going with what we have right now, where we can see that the big cap breadth has gone positive, you know, it kind of tells you, and maybe tells you, hey, maybe I should focus a little bit more on the big cap names, okay? So that's that. So once I go through the list, I came up with a watch list, right? So the watch list, I put it here on 7/12. So I'm just jotting down names on my notebook, and then I'm going to put them here. And then once I do that, I am going to put an alert on all of them. And the alert is very simple, is going to the previous day high. That's my alert. It's only from 1 day. And there it is, view 18 alerts, it's done. And then after that, I have 19 names on the list. I want to bring down that name to, you know, a handful of names, right? So with that being said, I'm going to go through the list. I'm going to see what I can take out, what I don't think looks attractive, or what, you know, maybe doesn't offer a good risk reward ratio. Maybe I only want to focus on the big cap names. Maybe I only want to focus on the stocks that over the last 40 days were up 4% or more on 3 times the volume, which when you look at the biggest winning stocks on a year-to-date basis, they normally all have this one particular criteria, which is at one point, this purple candle here, they were up 4% or more on 3 times the volume, right? So if I wanted to narrow down the list to just those, then that list goes down from 19 to roughly 11 names, which is a lot more manageable, okay? But then if I do that, usually the big cap names in the Russell 1000, rarely do they meet this criteria of being up 4% or more on 3 times the volume. Very rarely, just because they're just bigger names. So that becomes somewhat of an issue. So there are different ways to narrow down the list. The first one, you can narrow down the list based on your beliefs. So if you believe that only stocks above the 50-day moving average go up, then you only look at stocks that are above the 50-day moving average. If you believe that you should only buy stocks above the 200-day moving average, then that's a way to narrow down your list. If you believe that the only stocks that go up in the market within your time frame is stocks that have great earnings and sales, then that's another way to narrow down your universe. Or you can allow the market to narrow down the universe for you by getting you into stocks that break the previous day high and keeping you out of the stocks that don't break the previous day high. Okay, that's just another way. Okay, that's the way I like to do it. But at the same time, when I have 19 names in the list, I want to focus a little bit more. Okay, so I'm gonna go through the list and I'm gonna start taking out names. Lucid, it looks okay, but in a situation like this, you can buy the stock going through 358 and then you put the stop here at 344, which is fine. But I believe that this stock it's got a $1.2 billion float. And when you have stocks with really big floats or big cap names, you usually want to give it to the 21-day moving average. That 21-day moving average is way too far. It's all the way at 325. So let's call it the buy stop here. High is 358. I say the buy stop is 363 minus 320. That's roughly 11.8% away, right? So let's take that one off. ALNY, what do I like about it? Okay, it's a biotech stock. The biotechs have been doing extremely well lately. It had a nice move here on 624. They announced some phase 2 results. Heart trials, stock traded 9.2 million shares. It had a nice move. Now it's pulling back on very low volume. It's down 1, 2, 3, 4, 5 days in a row. Here's a 21-day moving average. It's bounced off that level, to the penny for the most part. Here's the anchor VWAP. Here's the inside day. So this looks good, right? So, going through 240.91, buy stop 241.01. You give it to this low here, 232. So that one looks okay. CCL. And by the way, these figures right here, very simply, the NASDAQ topped right over here. The NASDAQ from this level is down 5.25%, right? So this tells you what these stocks are down from that level. I can say, hey, I only want to buy stocks. I only want stocks on my list that are down less than 5.25%. That immediately is going to eliminate ALNY that we said we like. QURE is going to eliminate HIMS and it's going to leave me with all these stocks, right? That's another way to look at relative strength based, from a previous anchor high. Okay, so that's something to think about. ALNY, so now we have the CCL. Look, it printed an inside day on very low volume. This little blue candle here, it means that it prints an inside day on the lowest volume in the last 10 days. As you can see here, look how small this volume is. It had a big day here, up 4% and 3 times the volume, 106 million shares traded that day. You can go and check what the news was that day. More than likely, it seems that it was earnings, but we'll double check. So this one looks okay, but again, it's a big cap name. Float is $1 billion. It's 1 billion shares outstanding. Market cap 23 billion. You have to give it to the 21-day moving average, which is all the way at 1778. It's not that much. This is not a fast-moving stock, so it's okay. We'll leave it at that. AMSC, a good-looking name. Down 2 days in a row. Here's a 21-day moving average. It looks okay. Okay. CRDL, yeah, it looks okay. SRPT, it's a biotech stock. Had big news here on some trials that I believe traded 15 million shares. We tried it right over here. It did not work. Here's a 21-day moving average. This looks okay. Cure, again, biotech stock, big news, big volume. I'd rather see this go sideways a little bit more. Casey, it looks okay. 179,000 shares. It's again high float, 13 billion shares. Again, it looks okay. Cores, I like this one. It has to do with Bitcoin and also artificial intelligence. You know, big move, trading sideways. A lot of volume, 12 million shares. It looks good. Only concern here is that it's got a lot of eyes on it. Okay, but it looks okay. SLNH looks okay. Volume is a little too low for me, 268. MREO, biotech stock. Again, holding up well, flagging. This was on the list on the other day, so going through this high, I like this stock. CHDN, we bought this one, sold it. You see how it's coming back to this little breakout level. Here's a 21-day moving average, down 4 days in a row. I like this one going through 140.50. FN, again, it looks okay. Wix, again, it looks okay. HIMS, we bought this one, sold it. This one goes off the list. My buy stop will have to be at 21.12. It closed at 19.42. That's too much of a difference. Triple M reports on 7/26, which I believe is Friday. Again, this looks okay, but you got to get rid of it before Friday, because if it's on Friday that they report, it means that they're going to report before the market opens, so you have to get rid of it by Thursday before the close. And then you have Hood, you know, up 6%. I own this one. Printed an inside day, 21-day moving average, again acting as support. So this one going through 23.87, stop right over here at this low, 22.66, call it 22.60, right? So if we just go back and rewind this just a little bit, every single stock that I said, it looks okay, you want to get rid of those, right? If you want to just buy the ones that held up a lot better than the market, then you're taking these three out: LANY, AMSC, and QRE. And then what you have left is SLNH, which is okay, 268,000 shares. You know, it looks fine. Okay, volume only matters when it matters. There's certain times that you take a stock, you keep it off the list because of volume, and then it just takes off. Right? You're gonna get, you know, the percentage gains. They stay the same whether the stock trades above average volume or below average volume. That's just a fact. CORZ, again, good volume. You know, I always like these stocks that have big moves and that are not widely known. Small cap company, $1.8 billion market cap. You can argue it's been trading sideways for the last 24 days. So I like this one. It's simple. Going through this high and, you know, stop right over here. Hood, we already spoke about that. I like this one, right? So there's two that I like a lot. Twist, again, this stock held extremely well. NASDAQ down 5%. This stock up 2.71%. Even after this pullback here, it prints an inside day. There's that yellow 21-day moving average. So that's your stop right there. So, Cores, Hood, Twist, right? This SLNH, again, the volume is the issue, right? TMDX, they report on 7/31, that's next week. The stock had a tremendous move based on earnings. They can be an anticipation run to earnings. The stock printed an inside day on the lowest volume. Again, the market, NASDAQ down 5%. This is up 2%. So going through this high here, 148.43. Stop at this low, 143.40. So we're gonna go with that one. TMDX, CCL. I got to think about it too much, so we're gonna take that off. Let's take that off. MMM, again, it looks good. You have to get rid of it by Thursday afternoon, so we're going to keep that one. CHDN, we're going to keep that one, okay? Because what we're looking for is we're looking to get involved on the first day of a potential multi-day move, right? So we don't want to buy something that's up multiple days in a row like over here. Although people might say, oh, here is a breakout because it is prior resistance, but it was already up 1, 2, 3, 4, 5, 6, 7 days in a row. You want to get involved here. Here was the inside day on the lowest volume. We got involved here on 7-Eleven, and it goes up 1, 2, 3, and kind of like a 3.5 days. Okay, so we want to get involved on the first day of a potential multi-day move. So we're going to keep that one. Casey, again, this looks good as well. You know, I'm going to pass it because it had a tremendous run already. Okay, so I'm going to get rid of this one. Wix, again, looks okay, not bad. I'm hesitating, so I'm going to take it off. MREO, it looks good. Right sector, 21-day moving average. We're going to keep that one. FN, it looks okay. It's below the 21-day, below the 50. We're going to skip that one. CRDO, we're going to skip this one. SRPT, I'm not crazy about this stock, the way it trades, so I'm going to skip that one. I'm keeping this one. AMSC, it looks okay. I'm going to skip that one, and QRE is done, okay? So now I already narrowed down my focus list to 9 names. I'm going to take this one off, okay? And I'm going to keep 8 names, okay? Now, if you remember, I put an alert on all those 19 names, okay? So that alert pops up Monday morning, and the stock looks good. I might take it, although it's not on the list, right? It didn't make the cut, but it still looked okay. So I'm going to put an alert just in case. But that's how I narrowed down my list. Okay, so we narrowed down the list. Now, all these names here that we narrowed down the list to, 3 of them came from the scan that finds the best performing stock in the short term, which is the 4x3. 4 of them printed an inside day, which is great, and 1 of them printed it's down 3 days in a row or more. If you go through charts, what you want to see is you want to see where stocks, where does the move start from, okay? And what you will notice that a lot of times the moves will start after the stock is down multiple days in a row, or after it's gone sideways, and then at the end of that consolidation, it tends to the price and volume tends to narrow down, and then you have the breakout. Again, all that is here. If you go through all these videos, especially the long videos, you're going to come across all these things, right? So that's how we narrow down a universe of 6,000 stocks to 19 stocks, now to 9, now to 8 stocks. And then tomorrow, the market is going to narrow down that universe, right, by a simple criteria of getting through the previous day high, okay? What happens after you're triggered in is, you know, it's up to the market, right? But we did our job by narrowing down the universe. Now, I'm going to buy based on how much I'm willing to risk. If I'm looking to risk 0.25% of my capital, I take the buy stop, for example, 10, let's call the buy stop here 1060. Stop loss, let's call it 960, right? That's $1. Let's say I have a $100,000 account. I want to risk 0.25%. That's $250. I take $250 divided by 1. That's 250 shares. Okay, times 1060. That's about 2650. That's only 2.6% of my capital. That's very small. It's very small. Now, you know, one of the ways that you can increase that size is by obviously making your stop a lot tighter, okay? And based on that, what happens is when you make your stop a lot tighter, you can buy more shares. You can buy more shares, but usually your win-loss ratio is going to be a little bit lower but then your risk reward numbers, the multiples that you make based on what you risk, is going to look a lot greater. All right, and that's what some of these guys do. Like, for example, you see some of the guys who join the U.S. Investing Championship, whatever the case may be, they put very small, tight stops, right? And if it doesn't work right away, they sell it. If it's not green the first day, they're going to get rid of it, although the stock has done nothing wrong at all, right? That's great, but then you have to have the psychological fortitude to, number one, to be stopped out a bunch of times, and also have the ability to buy the stock back if it, breaks out the following day, right? So you have to find what fits your personality, right? You can have a 25% win ratio and kill it because you're using tight stops, and you're only holding on to stocks that work out immediately, right? Right, that's something that I can do on a personal basis, but when I have a room like the one that we have, I don't know if everyone has the ability, the mental ability, to be stopped out so many times and continue putting on trades. A lot of people don't. Okay, so now we narrow down the universe of stocks. I like all these stocks, right? Which one breaks out, which one works, no one knows ahead of time. Your job is to put the orders in. We know that the market is doing, okay. We were overheated. We pulled back. It's a normal pullback. You look at the IWM. This is normal. QQQ, a little bit more concerning. Below the 21-day moving average, below the 50. But breadth has done a little bit better. So you just have to put the orders in and allow the market to do whatever it is that it's got to do. All right, so trade them well and be well. If you have any questions, feel free to put it in the Twitter room, or you can email me.